Tai ką, pradedam renginį, gerai? Tai sveiki visi. Hi. So let's start our event. Our event is about markets and crypto assets regulation, MiCA. Today we have 2-hour event. We will start with the presentation from EBA, European Banking Authority, Rūta Merkevičiūtė. She is head of unit. Then we will have a fireside chat. Fireside chat will be led by Tadeusz Lukošius. He will bring some questions to Rūta Merkevičiūtė. After that, we will have a presentation from Darius Kulikauskas, CEO, Pervesk, and we will have a keynote speech from Andrius Bartminas, Superhouse CEO. After that, we will have a discussion. Discussion will be where the attendees of the discussion will be Tomas Tašaitytė. She is Financial Services Attaché at Permanent Representation of Lithuania to European Union. Evelina Kvedaravičiūtė, Project Manager at Bank of Lithuania, and Saulius Galatiltis, COO at Bifinity. I will moderate this discussion. I am Vytautas Šinavičius. I'm a partner at Response Legal. We have some changes in time, so our event is a bit postponed, but I think that we will have this end of this event on time, so somewhere around 6 o'clock. After that, we have networking, we have some drinks, and let's discuss about MiCA and about all opportunities which this brings to Lithuania. Maybe just a short introduction. I think that why we have this event in Lithuania, because Lithuania in general is one of the countries with which in 2018, 2017 started to think about crypto as the phenomena which will be in the financial market and it will be in financial services. And what we see right now that this phenomena will not leave the stage. And what we didn't see a few years ago, that when crypto was a ban for the credit institutions, crypto was a ban for electronic money institutions. Now we see that the tendency is changing, and Europe is the continent and the policymaker which decided to be the first one to regulate and to put all the ducks in a row how crypto activities and crypto business should be regulated. So, one maybe change which we see right now, it will be shared by Toma from Brussels, from Financial Attaché and Permanent Representation. She will explain about the trends which will be and discussions which are now in Brussels. But about that we will talk later, and we'll see what opportunities and what challenges we can have if we wish to be the first in Europe to implement this MiCA and to use this opportunity for Lithuania. So let's start today with the presentation by Rūta Merkevičiūtė. As I told, she is from European Banking Authority. Rūta, the stage is yours.
It's EU regulation of market and crypto assets. So just for record, MiCA is still not implemented. It is still negotiations at the Parliament, European Commission and Council. So 3 co-legislators are still negotiating. But anyway, we can already glance and see what the future of this regulation going to be. So If I may start, so the EBA, what is the EBA? And basically we call ourselves EBA, not you. In a nutshell, is an independent EU authority. So we are one of the European Union authorities, and our work is really to ensure effective and consistent prudential regulation and supervision across the European banking payment sector. So what it means, more or less, EBA gathers all the supervisors from the European Union. For example, in Lithuania, at EBA, Bank of Lithuania is representing. And we really have a mandate to issue some policy on how some rules should be interpreted, how some regulation directives, and then we want to have really the consistent supervisory mechanism across the EU. And this agency is quite new. It's established 2011 as one of the impact of crisis after 2008 and 2009 in order to enable and ensure consistent regulation of banking sector. So going further and starting where the MiCA started, so more or less for you to understand the bigger picture, European Union has a bigger digital finance strategy, and one of the priorities of this strategy was to issue a legislative proposal of markets in crypto assets. What it brings, so this strategy already was published 2020, but only now it's finalization of the MiCA regulation. But what it brings, and especially from the EBA, and why EBA is important also for Lithuanian market, because it brings a lot of significant number of policy mandates. For example, MiCA says that some of the companies should be regulated. How regulated, it is determined by the EBA or other authorities. That is very important for you to know is European ESMA, it's called European Security Market Authority. And it brings also a new role from the EBA in supervision. We are going to be the supervisors of issuers of significant asset-backed and e-money tokens. But I am just telling that it's not clear that we will be, because it's under discussion. For example, in the primary text, it was EBA as a supervisor of both tokens. Now the Parliament says maybe ESMA, is European Security Market Authority, should be the supervisor for significant asset-backed tokens. Previously, before the MiCA proposals, for you to know crypto assets legal status was more or less known, that it's always case-by-case analysis. Mostly case-by-case analysis were determined whether it's financial instrument, whether it's electronic money. If no status, it was and is still unregulated. So it's uncovered risk, no passporting rights, no impact on level playing field. So each country might regulate crypto assets very differently, and there is no homogeneous view on this. So really what was seen already in 2019, that both EBA and ESMA had an advice for European Commission that we have to introduce a holistic approach to crypto assets, taking in consideration different layers. One of them is really protecting consumers, then protecting investors. And when we talk about investors, it's the consumers who decided to invest or to buy crypto assets. Then protecting the system from financial crime, because usually it is seen that crypto assets might be used by criminals. Then providing clarity for firms, especially those firms who are engaged with the crypto assets, who are crypto asset exchangers, who are issuing tokens. Then safeguarding the internal market. So really the internal market is about all the market and all the players who are participating, and I am talking about financial sector mostly, and then promoting a sound approach internationally. What it means that the European Union has the common approach how to look at the crypto assets. Therefore, what we see that already in 2020 there was a proposal by European Union of the MiCA, regulation that is important for you to know in some layers. The intention is really to fill the gap and establish 4 new schemes of regulation and supervision. So the first layer is crypto asset service providers. It's what it means is crypto wallets or exchanges. Usually we refer to them as CASP. In Lithuania, for example, as far as I know, CASP are only registered at FIU and it's subject to AML regulation. Now with the MiCA, it brings them a new role I would say, as a financial institutions, with the capital requirements, with the requirements for consumer protection, with the requirements for liquidity. Another layer is where there is a role for EBAs, issuers of significant asset reference or e-money token. And what is the difference within the issuers of other asset reference or e-money tokens? It's the criteria that are set in MiCA. For example, to be able to be considered as significant, you have both to have the pool of your clientele. In proposal, it was not less than 2 million customers. Then there should be the exposure or the issuance of the token the value should be more than 1 billion euro, and other criteria that is relevant to assess. Also, the proposal said that if you want to be object to EBA or supervision, you can apply really voluntary and say that I am a significant asset reference or e-money token provider, so I want to have this supervision by the EBA. And then the fourth layer is issuers of other crypto assets, so MiCA also introduced them. Just to say that where is the role, and maybe the theme of today's is very good, how MiCA changes the supervisory landscape. So we usually, when we have financial entities, we are used that they are supervised only at the national level. For example, if some CASP is established in Lithuania, it's supervised by FIU. I don't know whether it will change in the future, but for example, like this. But with the MiCA, it says if you are issuer of significant assets reference tokens, so it is the EBA, European Banking Authority, who will supervise you. So it's an additional layer or supervisory mechanism introduced in MiCA. Also, it's very important what is the MiCA scope. It refers to crypto assets, meaning a digital representation of value, of rights, which might be transferred and stored electronically, but using DLT technology. So basically, DLT technology is the core to determine what is the crypto assets. Excluded from the scope is MiFID regulation. It's a regulation for investment services, CRD, deposit. What it means is mostly banks, deposits, and central bank digital currencies. So those who didn't hear any kind of saying about asset reference tokens or e-money tokens, so usually at the market they are called stable coins. So it's a token that value is related to some fiat currency or other cryptocurrency or other commodity. Or for e-money token, it's basically, I usually say it's e-money, but they are issued in the blockchain technology, using blockchain technology. And e-money tokens could be issued only by banks or e-money institutions. So basically, what is the scope of proposed EBA supervision function for issuers of significant asset reference? I am putting an exclamation mark because it's still not determined if the EBA will be supervising significant asset reference tokens or issuers, or the ESMA it will be. But more or less, it's clear that EBA will have the supervisor powers for significant e-money tokens. So truly what it's covering, it's more or less the same things that are usually covered by national authorities. So it's authorization process and decisions, data collections, especially for reporting, ongoing supervisory activities, on-site inspections, consultative college, for example, on-site inspections. It's envisaged that these kind of inspections and the teams would be gathered not only from EBA staff, but also from the staff from NCAs, National Competent Authorities. Then it's supervisory measures and sanctions. So we will be able to issue sanctions and engagement with third country authorities. So engagement, for example, if the same issuer is providing issues tokens in USA, in other countries. So our role is engage with these countries. They're the supervisory mechanism. So just looking to the timeline and what is the indicative timeline, it's already so-called trilogues happening in 1st June, 14 June. So the trilogues, it means that 3 legislators are sitting and agreeing on the final text of MiCA regulation, and we anticipate that the political agreement of co-legislation will be in June. Like I said, the structure of supervision is still under discussion. So I may say today that it's the EBA, next day it might be different authority, but at this stage, under the proposals, we see that it's still negotiable. And then if there's a political agreement, we expect in 2023, MiCA will enter into force. What does it mean? It's really enters into force and gives some power for EBA to issue some policy mandates. And for companies, the application date will be more or less, it dependent, it's negotiable, but it's more or less 18 months after entry into force. So it will be 2024, 2025 a year. But like I said, the more or less the real timelines we will be able to determine only if we reach the agreement that co-legislatures are reached in June. So this is a short presentation from my part. I hope you had now a quick understanding that what is the EBA role in regards of MiCA. And if you had any questions, feel free to ask.
Thank you, Rūta. Hello, everyone. My name is Tadas Lukošius. I'm a partner at law firm Response. So currently, since Jekaterina, my colleague, is not available at the moment, I would like to take over the steering wheel and start the Fireside chat with you, Rūta. So first of all, thank you for the presentation. It was really insightful. And could you please explain to us? Well, currently we have a situation where we have unregulated crypto industry. So as a fresh head of digital finance unit at EBA, could you sum up what are the main challenges that this unregulated crypto society, crypto industry is causing to the stability of the financial market and customers, if any, of course?
So basically, what I would start, it's a very interesting situation. Though there is proposal from MiCA, but still crypto assets are unregulated, and mostly it poses the risk for consumers. So recently we issued the warning for consumers for them to be attentive, because they tried maybe now already think that crypto is a golden mean, we are protected, but still consumers are not protected. The companies who are issuing cryptos, who are dealing with cryptos, are not financial institutions. They have no responsibilities. So these are the main risk that is posed by the crypto assets for consumers. From the stability side, I am not the perfect person to comment, but from the stability side, we could only talk about stable coins, that asset reference token, and recently European Central Bank issued their opinion that there might be the risk if the scope of stable coin is very big. But currently at the EU level, there is no stable coin issued at that level that could say that there is a risk for stability. But of course, this MiCA regulation brings the scope that this kind of risk, that it will be addressed whether you want to issue really a big sum of stable coins that could pose risks for stability.
Okay, thank you. And in your presentation, you already talked about the place of EBA well, during the process of supervision. So according to the current discussions, of course, EBA will be one of the authorities responsible for supervising big crypto industry players. So have you already taken any practical steps towards the preparation of this new function for EBA? And what are the I don't know, main challenges that you anticipate during this process?
So yes, so I guess preparation already has started last year or even 2 years ago. But if we talk about the challenges, I guess for all supervisors, it's very important to understand the landscape. And for EBA, all the landscape is all European Union, not only one country. So for us, the first challenge is to collect data and to understand what data to use, where to collect, how we can really understand what kind of market we have. Because without having a data, you cannot say what and how to supervise. Other challenges, I guess, it also comes with the knowing that the sector is new. The sector itself never been regulated. Regulation is something new, and then the type of supervision might be different than for usual market participants. So the interaction might be different. So these are the challenges that is different comparing to the banking sector, but more or less then you are supervising, then you know the models how to supervise, so it's nothing different. And I usually say for new market participants, if you are thinking what will happen, just look to what happened in banks, in money institution, how they are being supervised, investment companies. So it's something similar, and you have to build on that, on the previous experience of other institutions.
Yes. Yes, please. Yes, of course. I can give you a microphone.
Yes, so for me it's interesting the position also in the scope of MiCA and the authority. So do you see a challenge the decentralized finances market where the users can easily freely create protocol as a service? For example, lending protocol, where you don't have an entity who is managing or supervising that protocol. It is just purely on a blockchain and no one is responsible for that. So there is no entity to supervise. There is nothing to supervise.
Mm-hmm. Yes, so basically, yes, MiCA does not capture this kind of models. I guess MiCA is just a start of capturing crypto assets. Recently, for example, we issued a report on non-banking lending, and we captured the business model. What we see that there is a crypto lending, there is decentralized finance, like you said, happening. There is no middleman going on. So I guess for the future regulators, it will be a challenge to determine what to do with this model. So I guarantee it's under our scope, under our ESMA scope for monitoring for national competent authorities, and it's just a matter of time when regulators will look to this kind of models more deeply and try to find the way how to mitigate risks. I don't use the word supervise, but maybe mitigate risk, because the no middleman, mitigating risk might be a bit different or happening a bit through different sites. For example, MiCA, also we could look at, okay, it's crypto assets, how can you regulate? But now the approach is taken that we regulate companies who are exchanging crypto in European Union. So then we are regulating not directly crypto, but we're regulating companies. So this was the way really to solve these risks with the crypto assets in European Union. How to solve the risk if there is a risk arising with the centralized finance in lending, in insurance, I think that time will set the standards. But I cannot tell you currently how it will be set, but it's under our radar for sure.
Mm-hmm. Sure.
Hi, Rūta.
Hi.
Ex-colleague to ex-colleague. Okay, a quick question for you would be, EBA, we understand it's a banking, let's say, community, and suddenly they are responsible regulating something that might actually be a conflict of interest. Could you comment on that? Because I have to be honest with you, when I was in let's say a central banker, I spent some time, traveling around in the World Bank. There was a very interesting exercise where they asked, what is, the biggest challenge, for the banking sector? And the answer was smart contracts. Now, EBA, which I would say, banking community, trying to regulate something that they actually have a very, let's say, afraid a little, of the smart contracts on all the industry that is, representing crypto economy. So could you say to me, don't you think there is a conflict of interest for EBA, and actually not EBA should be regulating? We should, give to ESMA or to some, other, let's say, national authorities to regulate crypto industry.
Firstly, I would like to understand where do you see the conflict of interest, but more or less I would try to comment. So firstly, it's not the EBA regulating, it's European Union and the legislators are regulating. What we are doing, we are issuing in level 2 policy mandates, and we are looking at this, very cautiously. Firstly, I don't agree there is a conflict of interest in the first place. Secondly, I think all the competences are gained through banking industry. And what I say, maybe European Banking Authority, it's called banking, is not already outdated, because it still also regulates in a way or issues policy for e-money and payment institutions, for investment companies. So it's a big, wide pool of institutions and policies, and I guess for e-money tokens or asset reference tokens, it will be additional pool. But I do agree that it will be a challenge, of course, because you have to have the competences. But for interest conflict, I don't see there is the conflict of interest, or maybe I don't understand where should it be.
Okay, thank you. Are there any questions? One more question from me, Rūta. Let's be very practical. Currently, of course, we are talking about the regulation that is not adopted yet. But do you have any advice for the current crypto industry? Are there any practical actions? Are there any practical steps that could be implemented now in order to simply, for those service providers to be able to adapt to this new regulation?
So basically, the biggest impact, I think, for Lithuanian market, it would be for crypto asset service providers, so-called crypto exchanges.
Yes.
Because they are going to be under the scope of regulation. So what my advice would be, it's my personal advice, to look at the MiCA, because it already says some framework how you to prepare. It's about prudential requirements. It means you have to have enough assets, liquidity. It's about governance. It means you have to have already thinking about how your compliance CEOs are going to take decisions. And the last part is about consumer protection. So my advice would be really to start thinking about that, because it determines the future, and maybe it also determines the answer for the industry do I want to be a part of this future? Because not for every company it's easy to, one day you are unregulated, you are free, another day you are regulated. So I guess it's a very critical question for each company who is registered in Lithuania to ask these questions. I'm ready for regulation. I am ready to be compliant, and then decide and prepare, because the time really flies fast, and I encourage to prepare now. Start preparing now.
Okay, and are there any other aspects that are not covered by the upcoming regulation, I mean MiCA regulation, but still that are very sensitive to the current service providers and, well, that need to be steered thoroughly by these current crypto industry players?
So currently, like I said, MiCA is just a start of regulations, the start of crypto assets. And I said it doesn't cover crypto lending, crypto insurance, all the stuff. It's only covers the basics of the crypto, and that is the most popular to use. So I think that looking to how the policy are going on in Europe, and of course it coming later than anticipated, I guess, like I said, it's a matter of time. Then regulators will look to other themes of crypto. But MiCA will be the pioneer, and the success of MiCA will determine where European regulators will go further, I would say.
Okay. Thank you very much. I think we run out of time. So thank you, Rūta, and
I will.
To Vytautas, this. Yeah.
Thanks. So, thank you, Rūta, again. Yeah, the presentation was really good, and the remarks were really good. And what I see right now, that what we have, we don't have time at all. If we are planning to, I'm not talking about our presentation or our event. I'm talking just about the crypto business and preparation for that. Because when you see that if European institutions succeed to have the final compromise soon, so we have not more than 9 months, 12 months, as Rūta told, that it might be that in the first quarter of 2023, there will be already quite a lot of rules in force. So when we understand how crypto is still wild in Europe and how it is still wild in worldwide, so we understand that here from the Lithuanian side, of course, we have quite a lot of regulatory advantages, because, like I told in the beginning, and what Rūta mentioned, we have a crypto regime, we have crypto exchanges regime. We have a supervisory institution which understands the crypto, and from the other side we have business, which came from supervisory institution, also understands crypto. So let's start to talk about business, and let's hear the remarks and comments from the industry. So first of all, it's your turn. Please share your presentation, Darius, and let's enjoy and hear what we have from the Lithuanian side.
Thank you. Do I have an option to see my slides here, or should I just peek back?
They should also. No.
Okay, so I will be making these weird head turns. Okay. So, thanks to Rūta for this introduction into what MiCA is. So it, of course, removes all the burden from my shoulders to actually talk about what it is and what it is not. Still, I have this presentation, and when we discussed this with our colleagues back at the office, we used terms such as critical, but I myself don't believe that it is very critical of the regulation. I think it's, we are trying to take a very balanced approach to it, and just, you know, give credit where it's due, and probably outline areas where the improvement could be made. So having said that, my presentation as short as it may be, is structured into these 4 parts. We are going to talk about the state of play in the market right now. I'm going to touch upon the question of, do we need regulation in this market at all? After that, we will look at a wider question, whether MiCA answers all the needs and requirements to the regulator from consumers' perspective, from industry's perspective. And finally, of course, I will sum this up with my take on what's the future for European crypto market. Okay, so when I say wild, wild west of crypto, in crypto market, what I mean is that I don't actually mean that there's no regulation at all. I think the phrase got circled around a few times in previous presentation that, that was unregulated, and so I think for quite some time it has not been the case. I mean, it is not the case. But the issue is that regulatory regimes vary across the board, across the globe, and there are countries that take, very simple approach to this. They ban cryptocurrencies whatsoever, and these are the countries in red on the slide. Then there are countries that don't explicitly ban cryptocurrencies, but because of the interplay of regulation that is present there, these cryptocurrencies are de facto banned. And then there's countries that tolerate, allow cryptocurrencies to exist, and they regulate cryptocurrencies in one way or another. It is, even though they are all colored blue on this map, it doesn't mean that regulatory regimes are comparable there. Having said that, we have an opportunity to harmonize this regulatory regime across a very large economic area, which basically covers full continental Europe. And this might be, something, that sparks and ignites regulatory changes across the globe, hopefully. So, but first of all, do we need crypto market to be regulated? Of course, the obvious answer is yes, of course we do. I mean, even if you ask hardcore crypto industry incumbents, I think they would say that, they needed regulation long time ago, and right now regulators are playing only catch-up. The reason why we need this regulation is, of course, obviously there are a lot of bad actors in the industry, and when it's unregulated, there's no barriers of entry, and bad actors give bad name and bad reputation to the rest of industry players. That's the obvious answer. But at the same time, it goes somewhat against the true philosophy of cryptocurrencies. And when I say that, the cryptocurrencies, they came into existence because there were some tech-savvy people who were fed up with traditional financial sector. They lost trust with traditional financial institutions, and they thought that they could arrange financial system in a decentralized manner. So of course it goes against this philosophy. And I appreciate that, but in the end, I think crypto industry is too big now to be left to grow organically and without any guidance. But is MiCA the answer? And that's a very tough question because, as I said, I'm not being overly critical. I will give credit where it's due, and MiCA does indeed nail some of the requirements that we could prescribe to such regulation. But there are then, again, there are areas where it is lacking, and I will briefly touch upon them in the upcoming slides. Now, I have to acknowledge that it is really not that easy to regulate such a market, which is, I don't know, broadly falls under this term crypto industry, but it actually is comprised of a lot of sub-industries, so to say. And for someone who is not concerned with what EBA says, crypto industry, of course, also involves DeFi, NFTs, and other aspects of crypto industry that fall outside the scope of this regulation. So from the get-go, it's a bit of misleading. Markets in crypto assets, I don't know, it kind of feels like it should cover everything, but it fails to deliver on that. Yeah, but I mean, at the very least, what this regulation could do is remove uncertainty for businesses. So at least, you know, it can set up the regulatory perimeter, and for, you know, businesses that want to participate in that perimeter, it gives some clear rules and guidance. If you follow those rules, if you act accordingly, you will not lose your investment in how you set up and arrange your business. And if you do not comply, of course, there will be some sort of mechanism that will ensure that you will not get competitive advantage and you will be removed from unfair competition, and only the good players will stay in that perimeter. So that's probably the minimum thing that we could expect from this, at least from the market's perspective, and this is, of course, obviously coming not from the consumer's perspective. So now I will start delving into topics. I have four distinct areas that MiCA tries to touch on, and I will give my take on them. So first of all, the regulatory requirements, and since I started my my presentation with reference to Wild West, I will use all the cheesy phrases that I can get. So no, I've titled this slide, "This town ain't big enough for both of us," meaning that regulatory requirements basically will create barriers of entry into the market. You know, there's going to be prudential requirements, there's going to be requirements for initial capital to set up and run crypto business, and so on and so on. So basically, it will squeeze out a lot of small players, a lot of dreamers, maybe someone clever and very with a very perspective idea, but with very little capital, might not get access to this market, and it definitely goes against the philosophy of cryptocurrency industry and crypto industry as a whole, because crypto came into being, as I've mentioned, because a lot of people were fed up with how the system was run previously. And when I say that, I obviously refer to traditional finance. The other concerning thing about regulating crypto market is that, you know, if we look at the temporal aspect of this thing, I think it comes too late. So, of course, you can always, and if you ask me, you know, is it still the case that it's better late than never? Of course, the answer is obviously yes, it's better late than never. But when you are late, it increases, so to say, minimum requirements that you have to check before passing the regulation into being. By being late, you sort of have the benefit of hindsight. You have a lot of players that grew a lot, that established themselves in the market. You have a few players that are juggernauts of the industry and so on. And you have access to them. I mean, they are not hiding under the rocks. So you can approach them. You can analyze how their corporate governance structures work, how they set up their compliance procedures and things like that. Because most of those players are are working on the global scene, and definitely they have to manage their businesses so that they are compliant with different regions. And as we've seen in one of the first slides, the regulatory regimes differ quite a lot. So I think homework was not done properly on that part. When you look at MiCA, it mostly have a lot of MiFID, I don't know how to say, clauses that were copy-pasted and just reused, repurposed for this regulation, and it's not something genuinely original to the crypto industry, and crypto industry is, at least to my understanding, and I believe a lot of people share this thought, is a completely different beast. You cannot compare it like one-to-one with the traditional financial instruments. Yeah, and of course, some of the regulatory burden introduced with this MiCA regulation, and of course these are all proposals, they might not appear in the final texts, so there's this small caveat here that we should all keep in mind. But in the end, for example, there's this duty to take responsibility if, for example, a crypto exchange gets hacked, and because of that, users lose their funds or their crypto assets. I mean, there are a lot of instances where, hacking can be still successful despite the best effort taken up by service providers. And no such thing exists in traditional finance. For example, banks, they won't compensate you if the loss was because of force majeure, or the deposit insurance scheme, they have these limits of 100,000, and the mechanism is completely different. It's not up to you to compensate the customer, but there's this institution run across the industry which covers the losses. So I don't know. Some of these prudential requirements could be still reconsidered in terms of proportionality. Are they actually proportionate to what we are trying to achieve, and even in terms of do they deliver what we want to achieve? Now, in terms of consumer protection, I will be very brief. We need that. There's a lot of people, a lot of unexperienced people who show interest in cryptocurrency, in crypto assets, in NFTs and such. And there are a lot of people who take advantage of their lack of knowledge, their lack of technical expertise, and of course, a lot of people are getting defrauded. So definitely, MiCA will decrease the level of fraud happening in the market, so to say. It will increase the barrier for fraudsters to successfully pull off their tricks. But let's not lie to ourselves. Fraud will remain, just as fraud is still present in traditional financial system. I mean, always people will be driven by attractive ideas to earn money quickly. So, and even in this regard, where MiCA is lacking is, it does not cover NFTs, it does not cover DeFi, and both of these areas are very, very attractive and might seem very lucrative to uninitiated. For market insiders, of course, they are much more cautious, and especially those who understand what's happening behind the hood. They can take care of themselves, but your average consumer that you are trying to protect is left without actual protection here. Now, the problem with anonymity. This one's also a tough one. There's crypto assets that prioritize anonymity and actually are very good in achieving that. There's crypto assets that for them anonymity is a byproduct and it's not an actual product anonymity. You can trace back everything. Most of the blockchains are public, open source. All the transactions can be traced, tracked, and so on. But these open source projects, they have never been developed with things such as travel rule in mind. I mean, if you asked any of the blockchain developers what a travel rule is, I doubt that one of the first things that pops into mind for them would be something related to finance or compliance. They would start thinking about flights, airports, whatever, but anything but that. Yeah, so, I mean, MiCA is very strict on this one, and it introduces things into regulation and requirements into regulation that are not present with crypto asset protocols, and they could not have been in mind because no one could have foreseen that this is going to come into force. So this is another place where, at least to my mind, you know, the lawmakers, the ones that are working on this regulation could have done better homework and learned on how this thing could be delivered to the market so it achieves the goals but does not require things that are very unrealistic and in their essence just ban certain cryptocurrencies and certain business models. Okay, and the big elephant in the room. So MiCA actually was, let's say, initiated or conceived as a byproduct of regulators fearing Facebook with their project Libra, which is now, I believe, called Diem. Of course, the project is struggling to reach any meaningful production phase, and it's still a concept. But it was enough, you know, tech giants getting together and working on a global, stable cryptocurrency, which was supposed to be linked to US dollar, and that got a lot of regulators worried, especially monetary policy makers, because, you know, you immediately your monetary policy have to take that into account, and of course the whole world of finance was not prepared for that. And you know, if you asked a central banker how are you going to conduct your monetary policy given that let's say Libra is already present, I think, you know, you wouldn't get a very concise and answer that you could easily understand and interpret. So there's a lot of these things that are related to stablecoins in MiCA, and I think the attention to that is a bit disproportionate. Now, at the same time, it uses very, very strange terms that are very, very alien to cryptocurrency industry, to crypto assets industry at large. So, for example, asset referenced crypto assets, I think, yeah, yeah. So, I mean, it's even hard to remember that, but because nobody uses that. E-money token, I mean, also ask any industry insider without any prior knowledge about MiCA what an e-money token is, and you will get very interesting answers, I suppose. that would be a very good exercise. So, I mean, I'm nitpicking here. Of course, this is just semantics, and you might say that it doesn't matter how we call things, but when you have these terms that are not familiar to you and you consider yourself an industry insider, it just kind of provides you with this message that, you know, this regulation is not for you. It's for those guys with the suits and in the banking industry, but it's not for crypto industry. So by, you know, this creates these artificial walls and unnecessary burden of understanding that regulation for market insiders. So there's another area where, you know, better homework or a bit more humility, let's say, would have helped. And the final slide about the future. So I'm going to be probably very boring with this one. So only 3 ways forward for cryptocurrency industry. The regulation is coming. I don't think that, you know, you can vouch for that, that, you know, there's not going to be any regulation or you can expect that. It's going to be there sooner or later across the globe. And there's only 3 ways forward. So for example, you comply. So you stay in the business and play by those rules. Maybe those rules will be limiting to potential and possible business models. As it is always the case with regulation. We have seen this in traditional finance, but that's, let's say, a small price, I hope so, to pay for the benefits of consumer protection and similar. Then the bad, you will get a lot of industry players that will be trying to shop for, let's say, jurisdictions that are more liberal in some sorts of regard or fit certain business models better than others and so on. And no one is going to benefit from that if, you know, the consumers and especially the consumers, if, you know, the service provider keeps hopping from one jurisdiction to another and you get to agree with the different terms and conditions once in a while. And after a while, you will probably lose track who's responsible for providing services to you. And then the ugly, of course, don't play by the rules, get sanctioned, try to somehow stay above the water with this approach. Given the decentralized nature of crypto asset industry, I think it is actually possible to quite large extent, but that's why it's called the ugly. It's possible, but it's going to be nasty. So thank you. That concludes my presentation.
Thank you very much. I'm sorry, maybe we don't have a lot of time for questions. Maybe we can leave the questions for the next stage here. So thank you. And what I can just say, like a short remark, that sometimes I feel that many market participants in Lithuania are good, bad, and the ugly in one. Because from one side you are good, because you have to comply. On the other side, you always try to look for better regulation for the national regime, which is more flexible. So you are looking for some kind of flexibility, and sometimes you just have to take the gray zone. And if you choose the gray zone, it might be that you'll get the sanction, but maybe not. So thanks a lot, and let's then move forward. Let's talk now about the other trends. Andrius?
Thank you. I will also see some slides. Okay, so I have a little bit different approach. So all those rules, actually, all that regulation is for earthlings, for human beings. But the crypto world, the digital world, is actually the alternative world. So it's basically just assume that someone just flew to Mars and built the full new civilization over there. And basically what we're trying to regulate is not that world, but the Earth that has a connection with that world. So basically centralized exchanges, the services that provide services for people who want to enter to that world and go back from that world. But we will never be able to regulate what is going inside the decentralized world, which is built basically to be fully decentralized, fully autonomous, and fully with new perspective. Why it is happening, actually? Currently, we have a second generation of web. So we have internet, which is itself decentralized. We have internet infrastructure, which is decentralized. So when the people, for example, when our government says, let's ban this page, LinkedIn, Linkomania, anything, they're banning for themselves, but people can go and still see because internet is decentralized until you build your own infrastructure, as Chinese did, for example, as North Korea did. So you can basically ban like that. But what we're building with crypto economy, with blockchain, is Web3, which is basically starting with decentralizing, which starts with fully liberal rules, liberal free speech, free anything. And those fundamental rules is the next generation internet, which is improved internet, which is decentralized. And why this decentralization matters, actually. So what we had during these years in the field of digital economy, so we had data manipulation with Cambridge Analytica, we had trust issues with governments, politics, inequality, with lots of different things, even banning linkomania. So it is not a free thing. There is no such thing as freedom. We have data misuse and loss, single point of failure, digital identity. So we have lots of SIM swapping, identification problems in the internet, and et cetera, et cetera. And we have a technological progress. Actually, is it important? I think yes, it is. One thing is, a month ago, European Union signed a memorandum declaration for the future of the internet. And the basics of that document was democracy, was the freedom, was anonymity, which is for the finances, for the financial industry, it is not so great thing. Then we have European Union MiCA. We have this regulation which is trying to regulate things in digital assets in decentralized economies. And we have UNDP, which said that the future stands with decentralized. So even the big players of Earth, of that world that we're living in, sees that digital, that decentralized matters. So at some point, let's remember 2017, 2018, ICO, all that crypto blooming, exploding, everything, and then like really exploding like a bubble, yes? But last year we had, again, you know, NFTs, DeFi, new things, again, the growth of the market, attention. So I think there was a point of no return. So I don't have 2022 yet, but this is the Gartner's hype cycle for the blockchain, not for the blockchain itself, but rather for decentralized ecosystem, for decentralized markets. So we have cryptocurrencies, we have consensuses, we have blockchain platforms, which are already in the adaptation and fully adopted as innovations in the market. Then we have dropping smart contracts, we have tokenization, blockchain interoperability. So all the focus was to bridge those basically blockchains and to make them work together. We had non-fungible tokens, stable coins at the top of the hive. And I think what is more important and where is the big opportunity for new approach of regulation is CDFI. It is an awkward thing, which is centralized, decentralized finances. So what does it mean? So there are protocols. There are protocols that will be never regulated because they are fully decentralized. So even the person, even I, knowing how to write a smart contract, I can write it and publish to the blockchain. And anyone who can access, and anyone can use that protocol. But it can be complex. It can require identity for regulators. So there are CDFI model, which is, there are still like services that has to be centralized. As for example, identification of the person, as for example, better interface with the protocol for comfort of the human being, maybe custody service, which will grant the security and some comfort zone for the user, you know, to store the assets in a secure way. So this is just starting to appear. And I think the same like this innovation curve is also connected to that regulative perspective. How regulators sees that, what market demand is, what opportunity to innovate is. And I think that this curve shows, that there are lots of innovative opportunities that will, in several years, in 2 years, it will be at the adoption cycle. And it will be not something that we are talking and, oh, it is something interesting, but we will be using. Because, for example, cryptocurrencies, I think every second of fintechs currently is integrating or already had integrated the cryptocurrencies, so it has already happened. And that bridge between this new world and the old world of classical finances already happened. So what has driven to that adoption of the crypto economy? So first of all, it is a small thing. It is nothing, I would say, proud to be for the Western countries, but Bitcoin was adopted by El Salvador and Central African Republic as a legal tender. So that shows that even some countries sees the opportunity in the cryptocurrencies, in the Bitcoin. They see it as one of the hedging opportunities with the classical fiat currencies. Then we have, I think 90% of all of the central banks already is building, experimenting with central bank digital currencies. So there are lots of discussions. Who needs it more? Central banks or the cryptocurrency ecosystem? But I think it can benefit both. And I think that the blockchain can benefit, at large, the big society, the society that is not a crypto society, but that is used to use just random, regular, classical financial services. So tokenization of assets, NFTs. So I think we have a big misconception with NFTs. So today, lots of people just understand NFT as some picture, digital art, asset, or some, I don't know, game asset. But actually, NFT is just a shell. It is an empty shell. It depends what you're putting into that shell. So NFT can be a deed. It can be deed of ownership. It can be intellectual property. It can be anything that you can put in a digital environment and save it here and account it, transact with it. And what it gives, so basically that concept gives, I think we have first in a lifetime opportunity to have digital original things in a digital world. So if we had database entries before, and those entries were made in some centralized corporation database, so today we have ability to create some assets who are digital by design, original by design, and you can really own those. It is not someone's to, I don't know, some corporations to take you from. We have cross-effective alternatives to Ethereum, Binance Smart Chain, Cardano, Solana, Avalanche, I think 150 Ethereum forks. So ecosystem is creating new alternatives even to the blockchain infrastructures. Today we have, I think, 3 or 4 generations of different blockchains. There are blockchains who are scaling level 1 blockchains, it's called layer 2. For example, a Lightning Network for a Bitcoin, or a Polygon for Ethereum. And we have lots of different infrastructural solutions to solve scalability and effectiveness or cost effectiveness problems. I would say environmental problems as well. Because lots of blockchains from the proof of work consensus model started to migrate to the proof of stake or other types of consensus algorithms. And that is an opportunity, but also a risk, because proof of stake is not so secure as proof of work, and it has drawbacks as well for technicians and engineers to solve. We also have a progress in blockchain interoperability. So we have bridges. So I think last year it was especially the year of building bridges, bridging that, bridging this. But with that, we had lots of issues, security issues. So that actually demands a highly, ethical and secure way of developing things. So if, I don't know, in a financial sector, in fintech, there is more, responsibility for operations. So on a DeFi, on a blockchain, there's more responsibility on developing things. Because in the blockchain, we always say, in code we trust. So if the code is written in that way, it basically fulfills what it is written for. So we have also still existing challenges. I remember 2017, so there was like, oh, okay, blockchain is bullshit, public chains are bullshit, enterprise blockchains, private blockchains is the future. Hyperledger Fabric, R3 with Corda and lots of different implementations with DLTs, but that didn't work. So today we have example that private blockchains doesn't work, because they don't solve the problem of the trust. You have to understand what the blockchain solves first of all. The essence of the blockchain is to solve the problem of the trust of the market at the protocol level. And with the private blockchains, it is usually good to solve the cooperation trust with contrahents, with supply chains, with someone what they don't trust. And it doesn't solve the problem of trust from user to the company that owns that blockchain or that private chain. So it is not so great. Lack of a global regulations and accounting standards. Yes, we are talking about the regulations, but another big problem is accounting. For example, us as a company, we accept payments in crypto, but accounting is a big, big, big challenge and mess. So first of all, to accept, it's not so big deal. But if you want to spend that crypto to pay someone, it is a big problem because we don't have a standard for that. We don't know how to do that, and we have to educate our accountants to adopt with a trend. User experience, still, DeFi, blockchain, decentralized, is created by developers for developers. So there's a big usability problem. Lots of protocols, even those interfaces that it's so confusing, it's so complex. So that's why I think CDFI is required. We need, services to be more accessible. We need better interfaces. We need to educate the users to use the DeFi market protocols. And I think what will happen, it is not my only thoughts, but I'm basically prepared for the speech, and I'm citing some of analytics from Gartner, Accenture. So basically, so the blockchain, what is the promise of the blockchain and decentralized? What is the promise of Web3? So first of all, it's basically to make less intermediaries. We can interact with each other without any intermediary, and that is why the blockchain was constructed and created first of all. And Gartner, for example, predicts that by 2030, we have like growth of blockchain businesses by 3.1 trillion. It is big number for a crypto economy, but it is not big number for money industry, for the economy at large. Why? First of all, to innovate is expensive. Second of all, innovation is a long process. And third, innovation needs adaptation. And with all what is promising, there is still lots of things to do. regulation, ethics, self-regulation, learning, teaching, adopting, and many more. I think we have also a great opportunity. So lots of businesses, and we are working with those, when building something on a blockchain, they're just trying to mimic what is already done. So to copy classical existing business and to transfer it to the blockchain. In most of the cases, this doesn't work. I will have, explanation in another slide why. But I think the best is, and the mindset has to be set, that this technology actually can create new socio-economical models. So it means we can create new economical models instead of mimicking and doing the same as we already did. So there is a big danger just not to reach that promise, not to fulfill that promise, by spoiling things, actually doing the same as we always do. So I think the best solution to do that, the best solution to actually, the best solution to solve that problem is that we need a shift of mind. We don't need to understand or to think that basically that blockchain and crypto economy is just a way station to the digitization process. It is a totally different approach. It is a innovative, and it is paradigm of shift of the paradigm, how we are first interacting with people, how we are interacting with businesses, how we are building business models on the digital world. And this is not me. This is Gartner. So it is not my, my thoughts. And what is next? So Gartner also predicts the market growth, and that will be because of that decentralized. And what is beautiful, that the market currently is driven by the ecosystem itself. Developers develop things, they invest into the projects themselves, they participate, they even self-regulate. So you cannot deny that there is some rules, some self-regulation methods and mechanism behind. Of course, we have lots of different problems when jumping back from that Mars to the Earth. When you have to exchange to euro, we have to pay your bills, and then the big problems begin. But if you could stay there, and if you could, interact, pay for things with crypto, to fully live in the crypto world, you will not have those problems. And the last, so any advanced technology sometimes looks like magic, and this is the key point, I think. But first of all, to build that innovation, to build that new world, we have to have dreams. And having dreams, we don't need to stick to the old. We don't need to fail. We don't need to do the same as we did before. And we have beautiful opportunity to do that with new generation of internet. Thank you.
Thanks a lot. So maybe my short remark would be that it seems that right now we are still trying to regulate the thing which is not so well known and which is still changing a lot. And that's what I can compare with maybe some other regulation where I'm quite acquainted. Is like a crowdfunding, which we had for 14 years until we have regulation, and which will be enter into force only after 1 year. So here we have the regime which is still changing. We have Web3. We have, as Darius told, that we still have a lot of changes, and that's from that side. It seems that regulation is on time, because it's better than when it's a bit early and you still have to change. Maybe there will be a lot of mistakes in that, but we can move forward, and we can adopt it and then amend it. So right now we have the final stage of our event. We have a discussion. I would like to invite Saulius from Bifinity, Chief Operating Officer, Evelina Kvedaravičiūtė, Bank of Lithuania, Project Manager, and Toma, do you hear us? Yes, Toma is here. So let's have a...
Loud and clear.
Oh, we hear you really well. Hi. So, okay. Yeah. This is one. Let's talk about Lithuania. Let's talk about MiCA. Let's see what where we are right now, and that's why we have really good attendees in this discussion, because Toma, maybe I will start from her. Toma is from permanent representation in Brussels, so she knows what are the trends in Brussels regarding MiCA. Evelina Kvedaravičiūtė, she works in Bank of Lithuania for quite a while, and she was also a newcomer program. Now she is project manager, so she has a lot of feelings and practical knowledge what industry comes to Lithuania, what are the trends, and how they are changing. And Saulius, I don't know, we should start from the very beginning, but he was also working in the Bank of Lithuania, also in World Bank, yeah? And no, okay, you were just practicing. Okay, visiting, so that's very good. And now he's Chief Operating Officer at Bifinity, which is one of the key players in Lithuania. So let's maybe start from where we are right now. Maybe I will just start how I see the situation, that in Lithuania, like I told in the beginning, from 2018, crypto became interesting. And we started to talk about that. We started from ICO guidelines, 2019, STO guidelines, 2019, end of 2019, crypto exchange regulation. Then we had the crypto crash, if I can call so, and everything started to be not so interesting in Lithuania at that moment. And right now we have MiCA regulation, and we have really large global market players like Bifinity, who are in Lithuania and doing business in Lithuania. So maybe let's just discuss where we are right now. And we could maybe start from you, Saulius, just to understand why you chose Lithuania, how you see Lithuania, and what are your practical remarks from that aspect?
Okay. Hello? It's all good. So to be honest, Bifinity is actually a Binance Group company, and I think it was very interesting when we talked about, the crypto world and we talked about the financial world. I think the Bifinity is actually in between of those two worlds, and the synthesis is happening, and those two worlds are coming one to another. So the business model is very clear. We are trying to be in between. We want to have the opportunity for any crypto world participant to exchange into fiat, and from fiat, of course, to crypto. So why here in Lithuania? I think I can't say to you why they came. Actually, Binance is a network of companies. It's all around the world. So Lithuania was chosen actually very simple. There was some way, let's say, of regulation. So it made sense, for Binance to establish here one of the companies. When they established here one of their companies, and they have did certain things, of course, around the world in similar, but they realized that Lithuania could be a very interesting country, because it was quite an open-minded regulator. Of course, there were a few things that were already seen, like fintech industry progress. I think this was very good message around the world. So from Binance perspective, it made sense to actually look for open-minded regulator. It made sense to have opportunity to interact with local communities and look for, let's say, opportunity how to establish business, and does it make operationally sense, of course, profit, does it make sense, of course, as well from the business perspective to have here a company and work as well, within the global, on a global level.
Yeah, that's very interesting. So one of the things which is important is that when there is no regulation at all, you can choose like any jurisdiction. But from the Lithuanian side, there was like some kind of leaks or some kind of some hints to regulation, which was also taken into account when choosing Lithuania.
Let me be very simple here. When you have, let's say, when you register in Lithuania and you come, to, I don't know, even talking to the bank, they ask, where you from, what you're doing, what's your business model, and you're explaining that you are registered. It doesn't matter, how much you regulate it or not. It's already certain, assurance that your business model is viable. So even for the bank to interact with you, it makes sense, to establish, or say, explain to the bank how you work. As I said, it's one of the important things in the business model to have interaction between fiat and crypto. So banks, EMIs, whatever, you will interact with, they always ask you about business model. They look how you establish company, what are you regulated, what kind of regulation it is. So it was practical thing to be here.
Yeah. And Evelina, from your side, you saw the companies which came to Bank Lithuania during newcomer program, which talked about the crypto industry, what they are planning to do, and maybe you saw that there was also, of course, the downfall of such companies at a certain moment. And what trend you see right now? Where we're now? What is the pulse from the Bank of Lithuania regarding crypto companies?
So we just see interest from companies which is operating in crypto and traditional services, but as from the Bank of Lithuania side, today we have a conservative approach. We would expect that market participants operating in traditional services, they need to separate their crypto activities from their traditional service activities. But of course, we do understand that innovations can bring new, safer, cheaper, faster ways to provide financial services. But on the other hand, we do not need to see far into the past to see what can innovations without efficient regulation bring into financial sector. So I'm very happy about MiCA regulation because it will bring clarity into both industries, traditional and the crypto industry. It will bring clarity. It will address systematic risk and what concerns regulators, of course, is consumer protection, AML risk, even climate-related risk. So I believe that MiCA will promote responsible innovation.
Thanks a lot. And Rūta, during her presentation, a bit mentioned about the MiCA and what is the status, but from the EBA side, information is one, and from permanent representation, where Toma is working and handling this file from the Lithuanian side, we have very detailed information about that. So, Toma, from your side, how you see where are we right now with MiCA? Maybe you can share some insights about the open questions and, of course, not official, but forecast. How can we move forward with that? Because in Lithuania, you see, we are looking forward for clear regulation and rules.
Sveiki visi. Hello everyone. So, like Vytautas said, I'm the Financial Services Attaché from Lithuania to the EU, and I'm following MiCA file from the very beginning. And together with the colleagues from the Ministry of Finance and from the Central Bank, we are representing Lithuania in negotiations in the Council. So where are we? So the Council already has a negotiating mandate and the Parliament as well. So we have two texts and we are meeting in the trilogues to come up with the compromise, the last one, the one that will be applicable in the EU. We already had one trilogue where we kind of identified the political topics we will need to discuss further with the European Parliament. I can quickly run through those so that you would have an idea where we are struggling at the moment. So one of the main issues will be supervision, like Rūta already mentioned. Who is going to supervise stable coins? Who is going to supervise in general crypto asset service providers? Where do we have, and if do we have the role for national supervisors? What is the role of European supervisors? Then another topic is the scope of MiCA regulation. We also touched upon it a little bit today. Decentralized finance, NFTs, are they in or out? European Parliament is quite keen to include as much as possible into MiCA, where the Council is a bit more cautious. So we're kind of taking step-by-step approach. And then European Parliament is suggesting to create so-called significant crypto asset service providers category. It's not entirely clear. Do we need it? What it would be significant? And do we really need to make MiCA more complex and difficult than it is already now? So again, here Council is a bit more careful whether we really need that. Another topic very important for the Parliament is environmental impact. From the Council side, we have no provisions on that, but for the Parliament is very political and sensitive. So here, I think that's mainly currently the only topic where the Council is willing to look for compromises and to look for solutions how to address these issues the Parliament sees. Another few points, so AML rules, whether we need additional rules specific to the crypto asset service providers, like the European Parliament is suggesting, or should we rely on the general AML framework that we already have in place? Implementation and application of MiCA. From the Council side, and from the Lithuanian side, it's very important that we align MiCA with the transfer of funds regulation. Travel rule was mentioned already here, so there are many terms that we use in the transfer of funds regulation and in MiCA, so we need to make sure that the both legislative files and the regulations come into force at the same time, that they're coherent and they can apply together. French presidency is very determined to reach an agreement with the European Parliament by the end of June. They have planned 2 additional trilogues, beginning of June and the middle of June. And after that, it would be we will have more clarity where we can agree and how we can agree with the European Parliament. And if that is not enough, another one trilogue is planned for the end of June. But from my personal perspective, if anyone can do that in 1 month, that is the French presidency.
Very good remark. To be honest, yes, they have a lot of experience in that. To close the files, they have a lot of political also strength. So I hope that they will succeed. And I think that it's from the other side, it's not such a big file. So from one side, it's not big, but from the other side. I have a question for you, Toma, again, about the interest in this file. I mean that when we talk about Lithuania, when we talk, doesn't matter about crypto, crowdfunding, banks, we always talk about fintech, because Lithuania took a role a few years ago, maybe not to lead fintech in Europe, but to be among the leaders. And then they took the role to be among the leaders in payment services industry. Then they took the role to be the leaders. They are still maybe struggling or aiming to take the role to be the leaders in crowdfunding. And now we have the crypto. And we have Ministry of Finance from one side, which currently adopts some laws and wishes to align already and put some rules, some provisions from MiCA to Lithuanian regime. There are also comments that it would be really good to implement MiCA as soon as possible, because Lithuania is the country where we have quite a lot of crypto companies. So from that side and from that perspective, how do you see from Brussels? Do we have an opportunity to be one or among the leaders who in crypto industry as regards to MiCA? Who are now the maybe countries which are really interested in MiCA, which are really active in the discussions?
That is a very good question. So we discussed it already a bit today, and I heard some criticism towards MiCA, whether it's a good relation, whether we need it. So I think we should have in mind that European Union is the first jurisdiction that is trying to regulate crypto assets in such extent. And we see in Brussels that United States, England, United Kingdom, and even Asia, they're all looking and monitoring how this project is going to develop. And there are attempts already in talks in those jurisdictions to start regulating it as well. So in Council, the negotiations were not easy because it's a new topic. It's quite complicated and technical topic. At the same time, we had those negotiations during COVID, so it was always online. So those are what technical issues, how not to engage in the negotiations. But Lithuania was active from the very beginning on MiCA, and some other countries that have fintech centers active are also very vocal. So you can imagine that the presidency itself is quite active in this topic. During, of course, negotiations, they try to be neutral and to represent the council, but they have quite good experts in the topic, and they are very active there. Germany is another country that is very interested in how we're gonna regulate and how it's gonna impact on crypto asset market. So, but quite still a number of countries are not so active because, as I said, this topic is quite new and is quite complex and difficult. So they are taking a bit more cautious approach.
May I comment a little? Comment maybe from Binance side. I have to be honest with you. Binance is a company. They do actually apply for registration or let's say any way of being regulated in many countries in Europe. Right now it's a process, and what we see definitely is a interest from regulators to understand better the business model. I think that helps them to actually, let's say, learn about the industry from one side, and interaction with the leaders, you know, in the industry. It makes sense from their side actually to get this good sense, you know, where the things are happening on one side. On the other side as well, have to be honest with you, I think that if Europe will go too far, you know, with regulation in comparison to certain, you know, global standards like FATF, you know, guidances, we might end up with, you know, just, you know, some of the companies leaving the continent. So this is something that we need definitely to balance if we do see the value in crypto economy and crypto, you know, world that actually could bring a lot of efficiency. And I think few of the presentations were talking about that a lot. So my suggestion, you know, don't go too far away. Definitely good regulation, meaningful regulation. The faster it implemented, the more, you know, broader it is, you know, like for the full continent, not some, you know, interactions of private initiatives around, you know, different countries. That helps a lot for big business. That helps a lot for any business, because then you have some stable environment where you can plan, when you can, you know, actually do your business, and don't think about, do you need to move, you know, next year somewhere else because let's say of the over-regulation at that moment, your operational cost will increase in comparison to your competitors. So this is very important. So if we do that, you know, across Europe, if we do that in a meaningful way, not over-regulate, you know, in comparison to other continents, that will make a lot of sense. And I think Europe has a great chance to be leader here. On the other side, that could, you know, be a role model as well. So this is, you know, a wishful thinking, maybe. At the same time, there's a hope.
I would agree that Europe probably will lead this regulation forward, but let's come back to Lithuania. So I guess we can all agree that Lithuania is seen on the global arena as fintech hub already, and our voices are heard. We have our experts on working groups, for example, our board member, Simonas Krėpšta, was invited to Money 2020 to speak in the panel dedicated to crypto. So we are already seen, and we have tools such as Sandbox newcomer program where we can, which we can use to have these first success stories into our market and to maintain our leadership.
That's very nice.
May I react to leadership?
Well, let's.
Don't you have? Okay, let's move.
Yes. Well, I think that that's the good. The most important is first of all to have the strategy and vision, and then to start over with implementing with that. But when we talk about implementation, well, maybe then again the question for Evelina. From one side, of course, you are you have Bank of Lithuania as fintech-friendly supervisor, etc. Has many invitations to a lot of events. Sometimes they talk about crypto, sometimes about everything else. But what about the implementation and preparation for crypto? Maybe Bank of Lithuania has some kind of, I don't know, working groups, some kind of internal discussions. Because when I see that it might be that MiCA will be into force next year, I think that it would be the challenge for every supervisor and for every country, because really we don't have a lot of time. So,
of course, it will be a challenge, but we will have more market participants to supervise. But we are preparing, and it also depends on preparation of market participants. So I believe we already have these tools we already are talking with some big players in the crypto market. And our experts are already in the working groups, and I guess that the regulatory approach in the industry is that same risk, same services need the same treatment, and we have experience with all other regulations, so it won't be a big challenge. But of course, new ways of providing services can bring unexpected risk. So these can, such as DeFi and other new models, can bring unexpected risk, and also if sector will grow, also risk can grow and escalate. So.
okay, it's clear, and Saulius really gave a very good remark about over-regulation, that sometimes Europe can take a bit too much and over-regulate. And when you over-regulate, you don't have the benefit of the regulation. You have the worst thing which you can do. And in some cases, we cannot talk only good things about Lithuania. Of course, sometimes we over-regulate. And when we over-regulate, we try to solve the mistakes. And when solving mistakes, changing the laws takes much time. And in other industry, in other sectors, other companies, in other countries, they just grow so much without some kind of over restrictions that they don't want to come back to Lithuania ever again. So we, of course, in every country we have also such examples. But when we talk about MiCA, let's come back to this issue. And we today during presentations, I think that Darius also talked about that, whether regulation is too late or too early. And it would be really nice to hear from Toma's side. Toma, what you think about that? How you see it in Brussels? Because in Brussels there is not only European member state representatives. There are a lot of people from all over the world which are looking what Europe is doing, and how you see that we are standing out in the global arena regarding MiCA.
You're absolutely right, Vito, is that others are really looking at us and they're waiting for the final result. And we already touched a little bit whether we have this first mover's advantage or do we have a disadvantage. So I think it depends on us how we're going to do it. And I completely agree that we need to reach a balance because others will learn from our mistakes. and use them against us for their advantage. That's on one hand. But on the other hand, I would say that crypto asset is really international and cross-border. There are no walls. So any standard that we set, others will have to take into account. But I agree that we should avoid over-regulation and overstretching the lines. That is important. So I would think that Europe is right to be first, and is the right time to do that. From Lithuania's side, we're really trying to make sure that we do not ban from the very beginning certain models, because we saw such attempts during negotiations in the council. And I think that the approach that we took on MiCA, and that is to regulate and put protection on consumers, is the right one. And like Rūta said a bit earlier, it's the first step, and it should be a careful one, and we should monitor other crypto asset service providers that do not maybe fall into the MiCA currently, or might not fall currently, that we should monitor and then look for solutions at a later stage.
Okay, thanks, Toma. Saulius, so how you think? We have this topic today, how it will transform crypto assets regulatory and supervisory landscape. We heard from the supervisory side, we heard from Brussels side, from Toma's side. What do you think about that? From your side, from your business?
So from business perspective, actually, Binance as a group, they really happy that regulation is coming. And I should say even they want it faster. The time that, is set for, implementation, Binance as a group think that it should be faster, and it makes total sense to have this regulation. What I like Toma just said as well is that it makes total sense to time different regulations. It's very important. When you time different regulations, when you make, implementation, and you not over-regulate, of course, that sets a really good environment for the business actually to then plan, grow, and make sure you're not, banned or you're not, warned, or you're not, punished in any way, because it was a gray area. So this is very important. I'm really sure that MiCA will be with many, I would say, not perfect things. We will need MiCA 2, and I would say business, from Binance point of view, trying to regulate DeFi or trying to, put your hands on NFTs too early, that's not a really good thing. I think we should let this, industry to actually evolve a little more. And the first iteration of regulation might actually kill it. So I would say it makes sense not to touch DeFi at the moment, maybe later. And regarding the NFTs, I think we could touch some of the NFTs if they have, certain things like investment side, or we have, payment side, with them. So it makes sense to touch these things, not touch everything and then kill it, because it will move, to away from Europe, and Europe will be, again, I really know that we have, killed few industries with over-regulation in Europe, so don't mess with that again. And let's use this opportunity, be actually role model, not a loser here. And I think, United States are looking at that. So there are other things, I think, that are very important. When I looked at MiCA and some of my colleagues, they found that there is a scrutiny with, unhosted wallets. Seems like we want to implement travel rule on hosted wallets. I'm really not sure how smart it is at the moment. We want to do that, and I have to be honest, but putting too much regulation on that side might, actually make even worse the things. So we have to think about even more. So this is one of the things that I still wanted to emphasize. Maybe a few things on when you have to report. There is a, like as I said, a wall standard, up to €1,000, $1,000. This is a risk-based approach when you don't have to report it or over-report. Now we're trying with MiCA, to push that really low, implement travel rule. We want to push that too fast. And I think this is not a risk-based approach. And if we walk in the iterations, if we really want to make MiCA 2 smarter, we have to do that in steps, not over-regulate and then say, okay, we started running before we started walking. So this is something that I think is very important as well. So maybe those few things that I wanted to mention right now. There are a few other, but I don't think we have enough time to go for them. For everything.
Well, but we have, after event, of course, we have quite a lot of time. We can also discuss about that. So I think that it was a very good discussion. Maybe I'm just still thinking, but I will try to put all the ducks in a row and see what outcomes I see from this discussion. Well, I see that from one side we have advantages, that we have some knowledge about the crypto industry. From the other side, we have advantages that we are known about, that we are a country which is maybe not friendly, conservatively friendly about crypto, and but still there is from one side, from the Brussels side, Lithuania is active when we talk about the crypto regulation. In Lithuania, we also have active and strong market players, and we have Bank of Lithuania who understand what is crypto. And everybody knows that Bank of Lithuania is the supervisor where you can come and discuss about your ideas. It's not the institution where you have to wait 3 months to have the meeting. Then, of course, we have MiCA. We have MiCA, which might be that we will have the final compromise by the end of June. That's very nice. Then we have a lot of homework to do, and those homework depend upon Lithuanian policymaker, supervisor, whether they will be conservatively friendly or just conservative, and also industry, which of course from my side also has to be active and to explain where we can over-regulate or just put too much provisions, because in every regulation we have also flexibility, and there is no such thing. Well, I shouldn't say like that. Maybe some scholars would really not be very happy about that. But we don't have maximum harmonization acts right now. There are lots of flexibilities in all the regulations, in directives, etc., etc. So if Lithuania will choose to use some flexibility, and the industry will benefit from that, so then Lithuania will also benefit from MiCA. So thanks a lot for discussion. Thank you, Toma, Evelina, Sauliau. And if there are some questions, okay, just 1 second.
Yeah, I just have a question from commercial bank perspective. So average bank in Lithuania is very afraid of crypto. And when you're a small investor, a client of the bank, you never know if your transaction from the crypto exchange will reach you, if it will be declined by the bank, or you will receive some additional questions. But how do you think with the MiCA regulation, wouldn't it be that commercial banks will have even more, let's say, challenges if they will accept crypto transactions? Maybe they will have to do some additional reporting, and then maybe for the average bank it will be easier just to say that we don't accept any crypto transactions from any exchanges.
I don't know who wants to answer. I think that
Regulator.
well, I think that we don't have a regulator in general, but my feeling is that we had the same problem in a lot of other fields which were new. We have the same issue with the crowdfunding when they wanted to register the mortgages from the bank. We had some such issue with the electronic money institutions, and we will also have an issue here. But when in this dialogue between the banks, the supervisory institution attends, in some cases, of course nobody can promise, but you can always find a compromise. And find some kind of solutions. Because when you are unregulated, so you can expel you from your business without any arguments. And when you are regulated, so then you have to provide a bit more arguments about that. So, Saulius?
Maybe I can comment as well. I think it's very important to understand what is the approach from regulators' point of view. And I think it was very well put. They want to separate, the financial world from crypto. And when this message, went out, for the banks, it's very clear. We don't want to mess because we don't want, the sanctions from regulator. It's very clear. When you have MiCA, there is another playing, field where then there will be established certain, rules and practices where you could say, okay, now banks know how to do that. Regulator, will understand how it's done. They could say, okay, this is acceptable, go ahead. I think that it should ease the situation for the just retail, user perspective.
I would agree with Saulius, because when you are unregulated, it's different game, and banks are not afraid of crypto providers, but there is a lack of transparency. And when regulation comes, when MiCA comes, the transparency will increase, so it will increase your chance with communicating with banks.
Okay, so we are running out of time. So thanks a lot. Thank you for discussion. Thank you for all of you. So
I'm turning off.
yes, well, of course we have. The protocol says that we have to have this closing remarks. I think that we had all these closing remarks about when we talked about in this discussion. Maybe just to sum up it once again. My point of view, my feeling is that everybody knows that MiCA is the elephant, maybe not in the room, but it is the elephant, and to handle this elephant will not be easy. But it will definitely be. It will be in a few weeks, hopefully. So crypto industry will have to adopt, and I think that will have to be between the good and the ugly. So we wish all the industry players to do that, and let's have a good network after this event. Thank you very much.